Welcome to Markets Now. I'm Michelle Rook along with Tommy Grisafi with Advanced Trading, and we're kind of ending up the day mostly lower in the grains, mixed in the livestock futures. And Tommy, let's talk a little bit about this week's trade because we've had a lot of interesting moves here, a pretty good rally in the grains here, except for today, and a lot of that looked to be kind of some of this end of the year position squaring almost.
Yeah, markets are thin. You do need speculators in markets. The American farmer loves when speculators buy their commodity. When the speculator leaves the market, and they're not necessarily that bid if they're in the buying mood, and if the speculator switches from buying to selling, or just takes some time off, maybe the speculator will be back in there to buy commodities at the beginning of the year. There's a big lack of liquidity. So an order that would normally move the market a penny, sometimes in these holiday abbreviated markets, could move it a dime. So watch for big size to trade through the last few days of the year. We'll see who takes the other side of it, and we'll see which side they go. If we had adverse weather in South America, it could be very interesting. Quick note to all the listeners and watchers out there: we're going to close Friday. Merry Christmas. We will not open again until 8:30 Tuesday morning. A hard open, what they used to call like a hard open on the floor, except for there's not much of a floor left, if any at all. But we'll be in our basement trading at 8:30 on Tuesday morning. So a big gap between the Friday close and the Tuesday morning. That could be very interesting, Michelle.
Yeah, one of the things we might be watching then over that time span is whether Argentina gets rains or not, and that could really influence the soybean market here ahead, don't you think?
Absolutely. Keep your eye on oil, meal, soybeans. Keep your eye on all of them. But the meal market's been the super duper exciting one. Obviously, we had that liquidation in oil, and they came right back in and bought the meal. The meal market, we know how important meal is to Argentina and exports. So are they going to get the weather? Everyone's, the fear mongers, myself included, are like, oh, if South America gets rain, we're going to go a lot lower. What we need to remind ourselves and slow down: if they don't get adequate rains, how short will this crop be, and how great is world demand? Can we handle not having as many soybeans in the world? The numbers are still very tight in corn and beans. Obviously, wheat's changed its tune, and wheat's grown all over the world, but soybeans and corn still pretty special to both North America and South America as we go back and forth on these weather growing cycles.
So what is your thought about demand and how dominant it will be in light of the fact that, exports out this morning weren't good for any of the grains, but I think total commitments right now on corn are like half of what they were a year ago. Does the corn market just fixate on that after the first of the year yet or not?
Well, depending on how you back into the balance sheet, you could still have a very bullish scenario. But when you start figuring in demand and the lack of it, if we did have a big crop in South America and we do continue to lose demand both domestically and with exports, it could become a pretty bearish scenario pretty quick. Now, I'm not worried about the markets going down for a day or a week. I'm worried about the markets going to a much lower level and not coming back, much to like we traded back in 2013 when we had that big bull market in 12. And then at the end of 2013, 14, we never came back from those prices. And we went to a very dark period in prices when it comes to corn. We still have enough bullish news to keep us going. We could have one more really great run this winter, this spring. After that, things look tough for the corn market looking forward.
Part of corn's problem has been the fact that wheat wouldn't quit going down. It looked like we were trying to put a little bit of weather premium into HRW wheat here this week, but overall, is that market trying to bottom here, do you think?
It is, but a lot of people have been burnt being long wheat. And so if you're a speculator and you're long wheat, you always have those Sunday night opens when we open 40, 50 cents higher based on some Russia-Ukraine news. But the truth is Russia and other countries and grain leaving Russia, particularly wheat leaving Russia, is slipping, slithering all over the world and hitting ports quietly on the hush. And so wheat's readily available. We were never running out as much as people who had the wheat. The Ukraine was in the middle of a war, and Russia, everyone decided not to trade with. Now, as time goes by, we're at day 300, 301 upon filming this of the Russia-Ukraine invasion. The world was truly never running out of wheat. Just a bunch of people were short, and a bunch of people had hedges on, and
Okay.
it's not often wheat rallies $4 in a week, and the pain of that move. What does that do, right? When wheat had that giant rally, it sent a signal to the world: go ahead and plant wheat. It's at massive profitability. Now we're taking the froth off that market.
Certainly a lot of focus on the macroeconomic climate for 2023 and us moving into recession. Are you that bearish about that? And do you think that the commodities will latch on to that as well, or what are we expecting?
Well, the federal job had a reserve to do, and that was to pull money out of the system. And they did a great job at doing that. And people who don't understand history and economics, when the Fed raises as aggressively as they did, the very effect they wanted to happen was for all markets to deflate and become less inflation. Now, we still need wages to deflate, and that's a really tough thing to do because the labor market's still so tight. But commodities overall, I just filled up the tank here this morning. I think I paid $2.60 for fuel. That's a half off price versus what was happening these summer months, and that's
Right.
money right in the consumer's pocket. So it's not really smart to get bearish the Nasdaq on a 40% break or bearish the Dow on a 20% break. If you're in the equity market for the long run, over the course of history, equities do nothing but go up over the course of histories with extreme volatility in between. Commodity markets, though, tend to overproduce. So when times are good, like they've been, the world tends to overproduce, and we tend to go into a multi-year bear market. So a big difference between commodities and outside markets. I would say that over time, the stock market will correct and start slowly going back up.
Okay, so be on the defensive if you're a farmer right now.
I think so. I
Yeah.
won't write you a check if you're wrong. I'll tell you that much. I have people call my office all the time and say, I think the market's going up. I say, great, thank you. I'll note it in my notebook. If it goes down, I can't help you after the fact. So
Yeah.
better to insure the vehicle while it's still in good shape.
Okay. Have a great holiday. Thanks for joining us, Tommy
Merry Christmas, everyone.
Grisafi with Advanced Trading, and that's Markets Now.